Hi, welcome to VL Academy. We thank our YouTube followers for giving their constructive feedback on our videos which help us improve our content. One of such comments from our followers is to release concept-wise videos under the Companies Act 2013. And we realized that it would certainly help the Chartered Accountancy students or the Cost Accountancy students, as well as of course the Company Secretary students, to handpick such important concepts based on the title of the videos and understand the concept in detail, right? So with that objective, we are coming with a series of videos on important concepts under the Companies Act 2013. We hope you'll enjoy our content. Thank you. Hi, welcome to VL Academy. In our first video on the series of videos on important concepts under the Companies Act 2013, we will be discussing the concept of corporate social responsibility under Section 135 of the Companies Act 2013. Let's dwell into the subject. The first and foremost for us to understand is with respect to the applicability. Now, where a company has a net worth of 500 crores or more, or where a company has a turnover of 1000 crore or more, or a net profit of 5 crore or more. So it's either net worth or turnover or net profit during the immediately preceding financial year, right? So which means today we are standing in the financial year of 2022-2023. Now what will be the immediately preceding financial year? It will be 2021-2022. So during the financial year 2022, if the company has a net worth of 500 crores or more, or turnover of 1000 crores or more, or net profit of 5 crores or more, then such company shall constitute a CSR committee. And the board of directors of such company shall ensure that minimum amount of CSR expenditure, which is 2% of the average net profits for the preceding 3 financial years, shall be spent during this particular financial year, right? So this criteria is for the purpose of constitution of CSR committee. As we understand the applicability norms, it is now important to ask ourselves a basic question. This is basically an hypothetical situation where, let's say, the turnover of the company is high, that is more than 1000 crores, which means it meets the one of the applicability criteria. However, the company is facing huge losses. Okay, so business wise the company is not doing good. Now, even in such a situation, does the obligation to spend a minimum amount as CSR expenditure, does that still apply on such company just because it meets the applicability criteria? Let's get to know this answer in our subsequent slides. Before we get into the basic requirement of the CSR expenditure, in order for us to answer the question, let's try to understand the committee of CSR, that is the CSR committee and its role. Now, the applicability part we have already seen. Every company which meets that the criteria which we have seen on the first slide, that is with respect to the net worth or net profit or the turnover, such companies shall have the responsibility or obligation to constitute a committee. But let's just understand, when does CSR committee does not become applicable? The non-applicability, the first criteria of that is where the minimum amount of CSR expenditure does not exceed 50 lakhs. That is the 2% of the average net profits for the preceding 3 financial years. When it does not exceed 50 lakhs, there is no need to constitute a CSR committee. The board of directors can function as a CSR committee. Second, whenever the applicability, that is either the net worth or turnover or the net profit, that criteria is not met for 3 consecutive financial years, in such case as well, a CSR committee does not become mandatory, right? Next, with respect to the constitution of CSR committee, one should note that a CSR committee shall comprise of minimum 3 directors, of which 1 director shall be an independent director. But in a situation where independent director is not mandatory, in such cases, the committee may comprise of minimum of 2 directors. Now, the most important aspect is with respect to the role of such committee. See, the role of the committee is firstly to formulate a CSR policy, Secondly, to recommend the amount to be incurred on CSR activities. That is, the committee recommends the board that, okay, on an annual basis, this is what is the budget, this is what is the amount to be spent, these are the activities on which this amount has to be spent. And these activities shall be those which are specified in Schedule 7. Those activities should fall within the activities specified under Schedule 7, failing which such activity cannot be termed as a CSR activity and such expenditure cannot be considered as CSR expenditure. And then the third role of the committee is to monitor the implementation of this policy. By monitoring, the committee will take frequent updates from the company in terms of the actual and effectual implementation of the policy. So this is all about the committee. Now let's understand the concept, or rather the minimum requirements with respect to CSR expenditure. As per the Companies Act 2013, the minimum amount of CSR to be spent shall be at least 2% of the average net profits made during immediately preceding 3 financial years. Right? Now let's try to answer a question. So what was the question? Where the turnover is more than 1000 crore, that is, you're meeting the applicability criteria, but you are suffering losses. Right? Now, the answer to that is a mathematical solution. You just have to see during the immediately 3 financial years, what was your net profit? XXX. If all these 3 figures, or rather the average of it, amounts to a negative, that is, if you are having so much losses that your average net profits turned out to be negative, then you will not have any obligation to spend any amount of CSR during that year. So this calculation will be made on a year-on-year basis. And if during that year, when you make a calculation based on the preceding 3 financial years average net profits, net profits of the preceding 3 financial years, and you do an average of it, if that amount is not positive, then there is no need or there is no requirement to do any CSR expenditure during that year. So this is the answer to the question before. Now, a quick glimpse, or rather a quick understanding of this, is that the applicability criteria which was specified, or which was rather discussed before, is only for the purposes of constitution of the committee and for ensuring this minimum spend. But that doesn't mean irrespective of your profits or losses, you should spend that CSR. So if your company is suffering from losses, and if its average 3 years average net profits turn out to be negative, then there is no need to make any CSR expenditure, even if you're falling within the applicability criteria. This can be important from your examination point of view as well. Next is with respect to the unspent amount. Now, during the amendments in 2021, the law clarified that if there is any unspent amount, let's say the 2% average net profits for the 3 financial years amount to 10 crore. Okay. Now, let's say during the year, since this 2% amounts to 10 crore, but you have spent only 8 crore, right? So the balance 2 crore is an amount which is unspent. Now, what happens with this 2 crore amount is what this is exactly trying to address. Now, wherever there is such unspent amount, the first and foremost responsibility of the board is to explain the reasons for not able to spend, or for not being able to spend such amount during the financial year. And this was even before the amendment of 2021, the situation was comply or explain. So that's where you either comply with spending 2% or explain why you couldn't comply with it. Now, the law has been amended to say that such unspent amount shall be transferred within a period of 6 months from the end of such financial year into any of the fund which is provided under Schedule 7, either the PM Care Fund or the other funds which are specified in Schedule 7. So this has been an improvement, or rather quite a stringent amendment provided to the Act. So the crux is that either you spend it, or any unspent amount, you transfer it to any of these funds, and in order for it to be considered as spent during that particular financial year, right? So this is with respect to unspent amount. Now, what if such unspent amount is pertaining to any ongoing project? Now, there may be a scenario where there is an ongoing project, and for such ongoing project, you couldn't spend everything during that year, but ultimately in the next 1-2 years, you will be spending that amount on that project. Let's say you're constructing an hospital, and that is actually a project. Let's say it's spread across more than a year. So the idea is that where the money has been stuck, or rather money has not been able to be spent because of an ongoing project, in such cases, they do provide for a relaxation wherein the law provides that you need to open a specific bank account exclusively for that financial year and transfer such unspent money into that particular bank account within 30 days of the end of the financial year. And that particular bank account shall be utilized for next 3 financial years. If after the end of this 3 financial years, if there is any amount still unspent in that account, such amount shall be transferred to any of the funds under Schedule 7. And such transfer, of course, will be within 30 days of the end of the 3rd financial year. So again, the concept is clear. So if there is an ongoing project, fine, we will give you more time. We'll give you 3 financial years. You keep that money in a separate bank account for that particular financial year, right? So every financial year, if at all there is any unspent amount for a particular project, then you will have to have a particular bank account opened for that particular year. So this amount which is lying in this bank account for more than 3 years shall be, any balance after 3 years shall be transferred to any of the funds created under Schedule 7. So the idea is either you spend for the purpose of CSR or you transfer into these funds which will ultimately benefit the society. Then comes another scenario where the amount is spent in excess. Let's say you're supposed to spend 10 crores, right? As per example, against this, let us say you have spent 12 crore. You have spent 2 crores excess. Now when you are spending, when you're underspending, there is a criteria of sending it to a fund, right? So when there's an excess in the CSR expenditure, there has to be some benefit. So that's when the law says that wherever the amount is spent in excess, in such cases, it can be set off against the minimum CSR spend for the subsequent years up to 3 immediately succeeding financial years, right? That is, let's say for 2020, 22 and 2023, an amount of 12 crores has been spent. That means another additional 2 crores has been spent, right? So for the next 3 financial years, this 2 crore shall be adjusted against this minimum amount of CSR spend. That is let's say, the 2% of average net profits next year, let's say it turns out to be 8 crores, okay? This 2 crores of additional amount which you have spent can be adjusted in the next year. So 8 crores minus 2 crores, so you can only spend 6 crores in the next financial year because you have already spent an amount of additional 2 crores in this financial year. So this set-off has been provided as a matter of right to the companies, subject to condition that number 1, a board resolution has to be passed. Number 2, the excess which you consider as the excess of the CSR should not include any surplus which comes directly from the CSR activities. Let's say you are running a particular store for through some vocational activities, some money has been generated in that program. That money per se cannot be considered as excess. It is surplus from the CSR activities. It will be utilized towards the CSR activities. The excess shall be that amount which pertains to your average net profits and which is directly coming from the company's bank account or rather the company's cash flows. So this is with respect to the CSR expenditure. Now let us quickly understand the implementation point. So CSR activities can be implemented through either a Section 8 company or a registered trust or society or any other entity, right? Now, with respect to a Section 8 company, it shall be a company registered under Section 8 of the Companies Act 2013. With respect to registered public trust or society, it shall be registered under Section 12A and 80G of the Income Tax Act 1961. And any other entities shall be such entities which are established under an Act of Parliament or a state legislature. Right? Now, all these entities should have registered with MCA by filing a form CSR 1. Now, what is this registration for? This registration is to tell the ministry that we are eligible to implement CSR activities, and then a CSR registration number shall be generated by the MCA automatically through electronic form after you submit your CSR 1. So only those entities which have these registrations can only implement CSR activities for the companies. Now, but there are 3 important conditions for us to know. The first condition is all of this, either a Section 8 company or a registered trust or a society, should have been established by that company either by itself or by way of partnering with any other company, right? So when a company is implementing its CSR, it can implement through either a Section 8 company or a registered trust or society which is established by itself or by it and any other by partnering with any other company, Second, these entities may even be established by a central government or state government. So if a state government takes a voluntary step of establishing either a Section 8 company or research trust or society, in such cases, even those entities can still fall within this criteria. Now, in a scenario where you want to implement your CSR activities through a completely different firm or a completely different organization, in such cases, such a Section 8 company or a registered trust or a registered society should have a minimum track record of at least 3 years in undertaking similar CSR activities, right? Finally, impact assessment for CSR activities. Now, this has been an initiative to see that where and the average CSR obligations for in the 3 immediately preceding financial years has been 10 crore, and the CSR projects are having an outlay of more than 1 crore, and it has already completed 1 year after the initiation of such CSR project. Such CSR projects shall have an impact assessment done. An agency shall do an impact assessment for such projects, and the criteria is those companies for which the average CSR obligation in itself has been more than 10 crores in the immediately preceding 3 financial years, and the CSR project for which such impact assessment has been done should have an outlay of more than 1 crore. Okay, so that means the project in itself should have an outlay of more than 1 crore, and minimum period of 1 year should be the period for assessment, right? So expiry of 1 year is also important. Now, what is this impact assessment? Impact assessment is how does this CSR activity impact the society around, or the kind of people who get benefited, or the families which get benefited depending upon the kind of CSR activity it is. And the disclosure part is that such impact assessment reports shall be placed before the board of directors of the company. And also the annual report on CSR, which is prepared, which is nothing but it's an annexure to the CSR rules. It's a format which provides for detailed calculations as to what has been the minimum criteria of expenditure, what are the CSR activities for which you have spent, what are the amounts which have been spent for the CSR activities, shall be clearly provided in the annual report. And this impact assessment shall form, or rather shall be annexed as an annexure to such annual report on CSR. Right? So with this, we complete the entire analysis on the various provisions of CSR, both under the Companies Act 2013 as well as the CSR rules. We hope it is helpful to you. And if you want us to capture any additional topics under the Companies Act 2013, you may please drop down a comment below, and we would definitely take it up and come with you with a detailed explanation. Thank you. Hi. Thanks for watching our video. I'm sure you're liking the content. Please leave your feedback in the comments below. And we would like to announce that we also have a course on drafting pleadings and appearances for the company secretary professional students, which is currently now hosted on Udemy. So the link for the course is again given in the description below. Kindly share it with all your friends who may be in need of a good course on CS professional. Thank you.